Hey everyone, so in this video I'm going to be showing you guys how to invest in a real estate investment trust using Robinhood. Now even though this is on the Robinhood brokerage firm, you can go ahead and do it through any other brokerage firm, which is going to be the exact same way you buy and sell stock. So let's go ahead and get into this video. So what exactly is a REIT? A REIT is a real estate investment trust. It is essentially a company that invests in real estate classes, and a REIT is modeled after mutual funds, which pool the capital of multiple investors to be able to invest in different real estate classes. In order for a company to be considered a REIT, here are some of the requirements that are needed in order for them to be registered as one. So they must first invest at least 75% of total assets in real estate, and they should also derive at least 75% of their gross income from rents, interest on mortgages that finance real property, or real estate sales. A REIT is required to pay a minimum of 90% of taxable income in the form of shareholder dividends each year. And a REIT should have no more than 50% of its shares held by 5 or fewer investors. How does a REIT work? So a large amount of REITs are publicly traded on major stock exchanges and are bought and sold just like stocks. This makes them very liquid compared to investing in physical assets, since all you have to do is buy them and sell them through a stock exchange. And a REIT generates a steady income stream to investors through dividends. So there are 3 main different types of REITs. An equity REIT is one that owns and operates properties which create income producing real estate. The revenue is mainly generated through rents. A mortgage REIT is a REIT that lends money to real estate owners and operators through mortgages, loans, and mortgage-backed securities. Revenue is mainly generated through interest earned on mortgage loans and the cost of borrowing these loans. And lastly, we have a hybrid REIT. A hybrid REIT essentially owns and holds mortgages, which are both equity REITs and mortgage REITs combined. This allows you to get exposure on both types of different real estate investment trusts all in one. So now that you guys have a good idea of how a real estate investment trust works, how it is, and how revenue is created, let's go ahead and look at a few examples. So here I just have one example, which is ticker symbol O and known as Realty Income. So Realty Income is essentially a real estate investment trust that invests in single-tenant commercial properties in the United States, Puerto Rico, and the United Kingdom. So as you can see here on the screenshot, here's the property type composition, which is broken down into retail, industrial, office, and agricultural. This shows how the REIT is composed of with its different property types. And as we can see from the circle chart, we see that this fund is composed of 83% retail properties, 11.5% industrial properties, 3.7% office properties, and 1.8% agricultural properties, which shows that you do get property diversification through this fund. So the good thing about a REIT is that you can trade them just like stocks. So all you gotta do is click trade and buy. And all you have to do here is put the number of shares you want to buy and the type of order you want to execute, and your order will be filled. Now let's go ahead and look at a second type of real estate investment trust, which is called Stag Industrial, and it is the symbol ticker STAG. So what Stag Industrial is a real estate investment trust which is focused on the acquisition and operation of industrial properties throughout the United States. And as we can see in this picture, the enterprise value is $5 billion, the square feet is 91.8 million. They have properties in over 38 states, and they have over 456 buildings. So this just shows you how diversified the portfolio can be, or how sector specific it can be within the real estate asset class. So for our last example, we are going to be looking at the Apple Hospitality REIT. Now this is a public traded real estate investment trust that owns a portfolio of upscale select service hotels. And as you can see in the Robinhood app, it does say that it owns hotels located in urban, high-end suburban, and developing markets throughout the United States, which operate under Marriott, Hilton, or Hyatt brands. On this screenshot, we can see that it owns over 233 hotels, 29,759 guest rooms, over 34 states, and in 87 different markets. And on this map, we see all of the states in which Apple Hospitality REIT owns a hotel, and all of the states in which this REIT owns more than one hotel within this market. So one of the reasons that a REIT is very attractive to investors is due to the fact that you can invest in the real estate asset class simply by buying and selling these type of stock-like investment trusts. This does help you to get over the barrier to entry to invest into real estate, as having to invest into the physical asset classes would require you to go out, find the properties, and go through a lot more hassle than just investing within these real estate investment trusts. Now this does come with risk, and that should be also noted. Depending on what type of REIT you invest in, you are subject to interest rate risk, economic risk, and all sorts of risks. So it is great to do your research before you do invest in any type of real estate investment trust. I really hope you guys enjoyed this video and are able to use this in order for your own personal investing needs and portfolio diversification. Thank you for watching, and God bless you all, and I'll see you in the next video.